traditional venture capitalists are buying and holding these assets. Tech companies are building on top of these open protocols, and hedge funds are trading them and market making them to drive alpha. Our perspective was that you needed to kind of tear everything down, start from first principles, and rethink what actually makes sense to grow and proliferate these open networks. And we think that doing all three of them is the best way of doing that.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1. All right, guys, we have another episode of Layer 1 coming to you today. Hopefully you're doing all right. I know the market's been kind of tough for a lot of people over the last week. Hopefully you're staying safe from the coronavirus and things like that are happening across the world. But the show must literally go on. So we do have the Framework Ventures, two co-founders. We have Vance Spencer as well as Mike Anderson. I am with Dimitri today. Dimitri's going to be taking point on this episode. I'm going to be along for the ride. Dimitri, how you doing, man?
Yeah, I'm doing great, even though the markets are taking a turn, obviously. So, but the Ukrainian bear is here, so we're definitely, have some interesting guests, and I'm excited to get to them and hear their perspective, about DeFi and about everything that they pick in terms of investment in projects, and a little bit about the, current market conditions and where we are now. With Bitcoin and the rest of crypto. So yeah, let's get it.
Yeah, man. We had a dual episode with EOS Nation earlier in the week, and that was the first time we'd had like 4 guys on a call, and now we're doing it twice in a week. So let's put it on over to Framework Ventures. We got Mike, we've got Vance. How you guys doing today?
Yeah, doing pretty well, all things considered. I think spent a lot of time last night. We're out here on the West Coast, so it was a lot of early or late hours, depending on how you're looking at it. But it was fun to see that all play out and just watch from the sidelines.
Yeah, you guys said you're holed up in a bunker. You don't have to give away the location, but is everything doing good in Cali? I know over here on the East Coast, it's finally kind of starting to hit us.
We've got toilet paper, canned goods, all the apocalypse. But, things will pass. It's not as bad as it seems. It's just a little shocking when you wake up over a few hours span and things are as different as they are right now. But yeah, it'll be okay.
Yeah, I do appreciate you guys coming on the episode today. I talked with Joe from Waxman right before the episode. I was like, hey, listen, like if this doesn't need to go through, it doesn't need to go through. But thank you guys for making time. I appreciate that. So, guys, we always start the episode talking about your guys' background before crypto, kind of, how you maybe found yourselves in tech or another field and then moved your way into crypto, found Bitcoin, all the good stuff. So if you could hit us with that before we get into Framework Ventures, that'd be awesome.
Yeah, definitely. I think one of the unique aspects about both Vance and my experience prior to crypto is that we came from very traditional tech backgrounds. I was working as a product manager at Dropbox and then at Snapchat, focused on payments and commerce product, which meant that I was building out a lot of the payments and billing and commerce solutions that we were producing and selling or giving to customers, understanding what the traditional payment stack looked like, the billing stack looked like. And then on nights and weekends, I was studying Ethereum and even some of the other assets like Ripple, understanding what they were trying to accomplish with their payments technology. So that's really kind of what got me excited about it. And then Vince.
Yeah, my traditional background is I worked in corporate development at Netflix. I ran corporate development for Tokyo and Northern Asia. So I have a very kind of traditional consumer tech background in that sense. Prior to that, I was a management consultant, and really Ethereum was the first crypto that really resonated for me. Bitcoin and the whole digital gold narrative really kind of seemed like a get-rich-quick scheme dressed up. But Ethereum really has utility, and when you're kind of building, a broader financial feature, you can tell that the asset has some value, and so that's kind of really what attracted me to Ethereum in about 2015, 2016. And we've been in this space since about then, doing angel investing alongside our kind of tech careers and even starting a company. But Framework Ventures started in about January or February 2019. It's the first time we raised outside capital, and we've been kind of chugging along ever since.
Yeah. So how do you guys know each other prior to maybe Framework Ventures?
Oh, man.
Yeah. So when I moved from San Francisco to Los Angeles to work for Snapchat, one of my roommates in San Francisco said, "Hey, there's this guy, Vance. I think you may have met before. He's one of my fraternity brothers. You guys would hit it off." And so we started living together. And I think we went on this kind of like blind roommate date to decide if we wanted to live together. And one of the first, if not the first conversation we had was about Ethereum.
Nice.
So it was like two minds meeting. Yeah, ever since then, we've been living together, working together. Yeah, Vance touched on it, but we also started a digital collectible company after our traditional technology company experiences, and spent a lot of time figuring out what it was like to get licensed by the NFL, what it was like to build a consumer application on Ethereum, and all the different nuances and intricacies with that. So yeah, we've definitely been in the foxhole together for a while.
Nice. Dima, I'm gonna let you take point. I know I said I would, but I feel like we're skipping over a big story here. I mean, you guys worked at Netflix, Snapchat, Dropbox. Can you tell us anything about those times? Like that would maybe be an interesting story that someone obviously not behind the scenes would know.
Yeah, I mean, where to start? I think the traditional technology company experience is one of the perfect experiences and obviously we're biased, to prepare you for life in the crypto ecosystem, because there isn't that traditional technology product or business development type pedigree that you see very often. And that's one of the things that I think we could really use as an industry. So we like to bring that experience with us in everything that we invest in and try to build. I think, some of the more interesting experiences, at least from my perspective, I was there when we launched Spectacles at Snapchat and went through the IPO process with them, and spent a lot of time thinking about how we could actually bring blockchain or crypto assets into the Snapchat experience. From that experience and applying things like Bitmoji or local commerce or some of the geofence technologies that was built into Snapchat. There were some interesting models, but we could never really get the business figured out right. And frankly, as a publicly traded company, you could never really figure out what the token model would be because you didn't want to end up like Telegram. And so that's kind of what put the kibosh on that project. And that's when I decided it'd be time to go out on my own and do this full time.
Wow, yeah, it's super interesting to find out how like the traditional companies respond to crypto and blockchain in general. I guess maybe you don't have to have a token. Obviously you can just have like some kind of just a decentralized blockchain setup. But that's super interesting. And to get more into Framework now, how did Framework start? Like what was the push for it? How much did you guys raise when it started over?
Yeah, so when we were in the process of selling Hashly, it's our previous company, the digital collectible company, our plan was to go off and continue what we had been doing prior to Hashly, which was angel investing in the space. We were lucky enough to get linked up with a group who decided to fund the concept. And what we pitched and what we do is something that's pretty different from most other firms, most other angel funds or venture firms. And that's something that we call network capital, where we're investing in open decentralized networks, just as venture capitalists are investing in technology ventures. And so that's something that we've touched on in publications prior. But essentially, what the concept is traditional venture capitalists are buying and holding these assets. Tech companies are building on top of these open protocols, and hedge funds are trading them and market making them to derive alpha. Our perspective was that you needed to kind of tear everything down, start from first principles, and rethink what actually makes sense to grow and proliferate these open networks. And we think that doing all three of them is the best way of doing that. So that's what we do at Framework, and we have a different legal entity structure and a different operating mandate to go after all three models.
And how big is the team to handle all those three things? Because they're quite different, right? So do you have a specific staff that's handling each kind of thing?
Yeah, so there's 5 people total. Us two do all the investing and general kind of research and thesis formation. We have 3 engineers that work with us out of an entity called Labs, which is associated with our venture firm. Labs is really a company that does things like liquidity providing for our DeFi projects. So we're the largest Uniswap liquidity provider. Does things like OTC, does things like market making, will help provide liquidity to defend pegs if that needs to happen. So really like our engineering efforts are largely focused on supporting the projects we invest in. And that comes out of Labs, and then Michael and I are in Ventures. So it's a total of 5 people, but mostly kind of engineering concentrated.
How involved do you guys get in, with the project in terms of like, maybe advising them, coaching them on certain things, bringing your experience from, previous startups to these guys? What kind of resources do you guys provide on that level?
Yeah, literally, we're both on the phone, on Telegram, on iMessage with kind of all of our founders pretty much every single day. Like really our style is a couple different things. One, we tend to make more concentrated bets in projects. So we like to become, the largest token holders outside the team if possible. And that gives us a lot of sway in terms of, this isn't a community, this is a protocol. It's really owned by everyone. So we're governing it and working on it communally. And so the advisory part, it's advice in some sense, but it's mostly kind of like working together. That's kind of how we think about it. But really a lot of our tactical value add is, token economics, kind of restructuring tokens that need to be rethought out in terms of value capture and go to market. Governance, how do you keep maintaining a system that's already out there in the wild and keep it kind of moving in the right direction? So, we talk to our founders and advise them extremely closely. And I think that's something that a lot of firms don't actually do just because, their relative sizes, it just doesn't work in terms of the math, in terms of if you can commit this many hours to this project. So we do like to kind of emphasize that we have this closely held familial vibe to our firm.
And the only thing I'd add, piggyback on to what Vance is saying, is we also do things like build product. We come from product backgrounds, and these are open networks that need community governance, but also product governance as well. So we just launched a very beta version of a block explorer for Synthetix. snx.tools is the domain. And we're going to be continuing to build a number of tools and features through that. That project is solely in collaboration with community members that we've met in the Synthetix community who want to be working on this. We're working with the foundation to help fund some of the development work or some of the design or legal work. We've been funding it. Framework Ventures has been funding it to date. But that's one of the things that we like to do as well, bootstrap product to be able to enhance distribution for these networks.
Yeah, you guys had early investments in projects like Synthetix, Chainlink. I know you talked about CommonwealthLabs as well, the team behind Edgeware. Take us through kind of the beliefs that you guys had that led you to those early investments in Synthetix and Chainlink. I know you kind of broke down your 3-pronged approach, but as far as like specifically what led you to Synthetix, Link, and then CommonwealthLabs, just 3 of them.
Totally. So maybe the order of operations, because it fits with the narrative, would be Chainlink, Synthetix, and then Edgeware. Chainlink was actually something that Vance and I discovered when we were angel investing. So the majority of what we have focused on with Chainlink is from August or September 2017 and onward. So we've been deep in that community, helping to foster, through some of the worst bear markets, as we've seen on days like today. How do you build that community? How do you foster that group? And how do you bear that brunt of downward price action to be able to withstand that? And then how do you go through the process of telling a narrative about what Chainlink is? And it's extremely technical, esoteric product that was kind of remains to be seen until May 2019. So you have this fervent group of followers that are taking this project and shepherding it through that period of time. And that's really kind of one of the things that led us to community being such a focus in our investment thesis. So that's one of the things that we learned about Chainlink. I'd say the way that we found it was actually really simple. We just started reading white papers, and one of the ones that we found was Town Crier with Ari Jules coming out of Cornell in IC3. And it was this obvious way of having both privacy and throughput through an Oracle product on Ethereum. And back in May 2017, that was novel. And then Chainlink was effectively an enterprise implementation of Town Crier, and that's kind of what got us initially excited about it. Synthetix. I met Kane at a Chainlink and Friends dinner in Berlin. We didn't talk about Synthetix at all. We just talked about life. And after that, we just kind of followed up and got to know the team a little bit better, got to know what the network was. And we've really started to build a thesis around this synthetic asset and decentralized BitMEX thesis that is really stemmed from the Synthetix investment. So they've really kind of helped us understand what that value opportunity is.
Yeah, absolutely. And Kane was great. We had an interview with him. I definitely connected with him. He's a great guy. You can talk to him about just in general market or just about life. I definitely had a good time, on the interview with him. In regards to like picking projects, do you guys like to, get into opportunity at the very start of a project or midway, or maybe distressed project that needs help, that's struggling? What's your kind of sweet spot that you would rather get into?
Yeah. The answer is because we're so closely held, we can kind of do a lot of different things. We've done things that are pre-seed. We have a lot of really exciting projects that are coming out of just kind of getting to an MVP and starting to get towards, mainnet launch. We've also done things like, okay, Synthetix, it's on nobody's radar. It has some weird token economics, needs a lot of work to be done. The community's not even really there. Let's put in $3 million at a, $25, $30 million network cap and see if we can turn it around. But the thing that's common among all these investments, and we play kind of along the entire spectrum, is, we have a thesis about data, which is, obviously relying on oracles. We have a thesis about kind of taking a share of the open interest from BitMEX, which is obviously related to a synthetic derivatives platform. And we have theses that, are going to come out in the next couple months here about, the next extension of that. And they all fit along this very clean, logical path of these projects building on top of one another to create this thing that is kind of greater than the individual parts. And so that's kind of like, how we play in terms of, just some qualitative criteria that doesn't necessarily fit in any clean, logical box. Like you mentioned, Kane is just obviously like a great dude. He really likes to push the limits of what's possible. He likes to move fast. He's really dedicated to the project. He's really strapped himself to a rocket, and it's going to go through Mars or through the crust of the Earth. And like we're 100% either way. And Sergey from Chainlink is the exact same way. Like you're starting to see this emergence of world-class, I guess you wouldn't call them CEOs, but world-class protocol leaders. And that's really what we look for above anything else. Like it can fit within the thesis, and that's all fine and good. But if you don't have someone who is able to rally a community behind them, it's really all for naught. And so, people laugh at the Sergey memes. They laugh at like, the weird, like, 4chan Pepe memes of Chainlink. But like a lot of those are the lifeblood of the community. And it's indicative of how, decisively amazing these leaders are. And so that's kind of what we do look for among all kind of parts of the investment journey.
Yeah, Dima, I'm going to let you ask your question here, but we Sutler Ventures took like an investment position, and we ran a node on IOST. In IOST, we talk with a lot of people in the community, obviously a lot of devs, and they talk about technology all the time, right? Like the IOST tech is amazing, yada, yada, yada. But we found the same thing that you just talked about. Like a network right now needs narratives. It needs what we call face of a franchise, right? And without that, IOST's kind of like been, dealing with some issues there. So even though the tech can be what it needs to be, I feel like just like humans, and we need like fundamental narratives that revolve around leaders, right? So I think that's an interesting point. But Dima, you can go ahead.
Yeah, no, I was going to ask, so what are you guys looking at in terms of just the market overall? Obviously DeFi is a huge thing for you guys. Are you guys exploring other sectors as well, where, especially right now, given the fact that, we had quite a bit of a sell-off in the market. So a lot of people are going to be going down with the shopping cart, and picking up some of these, some of these great values that are on sale at the moment. So what other sectors are you guys looking at? Do you have a specific one that you kind of, just going to focus on, or are you looking to broaden that to others as well?
So when we started Framework, we always started it with a Web3 thesis. And the Web3 thesis has subcategories that maybe happen in series or in parallel. And so we're starting to test some of those potentially in parallel submarkets. I would say it's hard to tell if there's a product category other than DeFi that could work at the moment. Even some of the Web3 companies that we've invested in, we saw them as DeFi companies, and they maybe see themselves as DeFi now, but Web3 in the future, which I think is really what our thesis is. DeFi is what's here and what's now. It's what's working. There's business models and token economic models that make sense. And it will also form, we believe, the financial or the basic product primitives that will be able to build Web3 products in the future. And so the things that we're looking for, and I don't want to forget about Edgeware. Edgeware is actually one of those products that we think could be an associated submarket that's happening in parallel or at the same time as DeFi. It could be DeFi, it's its own standalone blockchain. We don't know exactly what it is yet, but with the governance primitives that you see in what they're building, I think that will help define a lot of the categories of what a token means, not just from a valuation standpoint, as we've seen with buy and burn or dividend issuance with some of these projects. It's what does it actually mean to be a token holder, and what rights potentially do you have if you're a council member, if you're a token voter, or just someone who's a passive maker holder. Those types of models that are being tested, hopefully, over the course of 2020 and 2021 is really kind of the next category that we're looking to invest in.
Yeah, I'm guessing you guys are actively looking at the Ethereum community. I think they just, through all the interviews we've had, it just seems very apparent that Ethereum has captured this base of community that is necessary to go forward, where you have other projects that maybe, have better tech or have better this, have better that. But the funding and community behind Ethereum is massive. So something like a Polkadot, are you guys looking at them? Obviously, Edgeware is a parachain of Polkadot. Are you guys looking at what they're doing there?
Yeah, I mean, we're looking at everything. I wouldn't say that we're necessarily funding ETH competitors or ETH killers, as they're called.
Yeah.
Because we view the exact same perspective that you have, which is that ETH has a network effect, has a developer mind share. It's going to be really hard to displace. It's possible that different monetary policies or tech stacks enable a different type of model, a different type of application-specific blockchain, for instance, on a Polkadot or even a Cosmos. And so we're looking at some of those application-specific blockchains, but we're not necessarily looking at the underlying tech. So that's where Edgeware fits in with us. It is technically its own blockchain, but it's built on top of Substrate, and it'll be a smart contract platform for Polkadot. Another investment that we've made is a project called Kava, which is a maker competitor. Yes, it's built on Tendermint, and so it has relations to the Cosmos ecosystem, but its own blockchain. And the token is actually, and the way that it's built on top of Tendermint and Cosmos enables it to have things like, there are no requirements to have Kava in your account if you want to send the stablecoin like you would with DAI and Ethereum. You could reduce the transaction fees for sending it to be extremely small. To ease more use. So there are some advantages like that we think could actually provide a better consumer experience. And so those are some of the more kind of interesting experiments that we're working on right now and looking to help foster those communities as they grow. You
guys are killing it with founders, man. We had Brian on the podcast as well, and Brian Kerr is awesome. What brought you, what made you find Kava? Was it just another, hey, it was just happenstance, I met him here and, I found out about Kava, or was it just through your research?
So it was through research and getting to hear what he was talking about on some of the podcasts, some of the shows that he was doing, hearing his perspective, and just to use your phrase, the face of the franchise. I mean, he definitely provides that in spades, and so that was a huge kind of initial point of interest for us. And then it turns out that we're based very close in the same neighborhood. He and some of the Kava team members actually now share some of the same working space that we have. So we end up seeing them quite frequently and enjoy spending time and working on token economics or different go-to-market strategies with them.
Nice. So let's come back a little bit, to like Synthetix and DeFi, because it's super interesting to me. And, I talked to Kane about it, and we had a pretty good discussion in regards to certain struggles that they're having right now, right, with the oracles and, front running, and that, basically some people call it the hack, some people call it the exploit of the DeFi, right? And we specifically talked about how, you might have, like a perfect plan, right, for DeFi, and you deploy it, but then the market basically starts finding these, want to say, loopholes or inefficiencies, right? And you're kind of, have to adjust on the way, right? So if you wait to have it, perfectly done, and you think it's perfect, it's definitely not. So he, from his perspective, you have to, kind of put it out, test it with the market, and then continue to adjust it to adapt to these kind of inefficiencies. So what do you think about, that DeFi, where it is now, as far as the stage of growth goes, and how do you see DeFi responding to these type of issues with front running delays and so on, right?
Yeah, so I think DeFi is 18 months old, like total. So it's pretty young industry, and it's gonna pretty naturally have its hiccups because nobody's ever really built anything like this before. Like front running is in flash hacks or flash exploitations. These are an issue for all projects, and this is just like shared context that nobody's worked through before in terms of solving these problems. But generally, kind of what we see from founders, from people who build these protocols is, you need to play a mixture of defense and offense. Defense is, okay, how do we shore up the protocol against front running? How do we prevent against things like flash hacks? How do we prevent against things like spot market manipulation that, is detrimental to synth holders? That's really kind of the defensive side of things. And really, until you kind of shore up those core issues, there's no sense in building a robust go-to-market, putting all these really interesting assets out there, doing leverage, because, not only is that a porous funnel that, consumers are just going to pour through because the system isn't, fully safe. It's actually very dangerous for the stakers on the other side because they can be taken advantage of. So, I guess that's a long way of saying that, this is kind of to be expected. And we saw the past 6 months as people really starting to grapple with the seriousness of these issues and to work through them. So, as of about a month or two ago, front running is effectively a solved issue with fee reclamation on Synthetix. Flash hacks or flash exploits were a big kind of topic du jour 2 months ago. Now we're starting to realize things like delays might be able to solve that problem. Mm-hmm. But, like I saw yesterday, there's now $25 million available through Aave for flash loans. This is a kind of a subject that has an increasing surface area of attack with increasing ammo to exploit it. So, do I think this is the end of kind of that phase of DeFi? Absolutely not. There's going to be a cottage industry of kind of grayish hat hackers that are kind of using these exploits to, either gain bug bounties or to take the underlying collateral or to mess with the system in general. But this is going to be a continuing issue. My hope is that by, the end of, next quarter, there should be kind of enough of a solid ground foundation for people to really kind of put this behind them and start to develop, the robust go-to-market, the robust asset listing, the robust types of synthetic assets that will really draw users in mass to these platforms.
Mm-hmm. Got it. Yeah, it's good to hear that they're got improvements already in place, and they're still working on more. And that 25 million, I saw that on Twitter. Kane retweeted it. It definitely kind of puts like a bullseye on like for the people that are trying to exploit this. And I was talking to him about this where when the exploit first came out, somebody on Twitter basically just outlined how it's done exactly. And that started to spread, which definitely doesn't help, right? When you're dealing with issues like that, to spread it around, because it just increases the risk, of people continuing to do it, right? So the question that I had in regards to Synthetix, also I wanted to ask, back where I was working for FXCM, which is an FX broker. We had these issues where people would front run in FX as well. But, obviously we have an account, we have the client, and we can easily just be like, okay, great, man, we're just going to increase your spread and good luck with that, right? Good luck with picking us. Or we just, close the account or whatnot, whatever. But with, just DeFi, you can't really do that because, they can just open up a new account. There's no KYC and so on, right? So Kane was talking about how they were trying to battle this by raising the fees for everybody, which is because of these certain bad players, right? You raise, and now the whole community is hurt by these fees, which would not be a right thing. So they went about it in a little bit a different way. But my question is, so in DeFi and with the regulations that are in place right now with the AML and KYC and so on, how do you think that, is going to affect DeFi, like, Synthetix and some of them that don't do KYC, and struggle with just, with these issues, and maybe sometime down the road, they'll start struggling maybe with some regulations because, regulators are taking an active role right now when it comes to AML and, KYC and so on.
Yeah, so in particular with regulation, it's something that we think about a lot and something that we definitely advise a lot of the core protocol teams that we work with on what we're seeing in the market as best practices. And some of the things that we're seeing are these protocol teams going the route of full decentralization. You're starting to see this with the creation of the Grants DAO on Synthetix, the move to Chainlink oracles. I think there's a lot of other things on the roadmap that Kane is pointing to that will get them into a point of at least sufficient or full decentralization to hopefully negate or definitely satisfy the requirements of regulators. Even things like the compound token and having that be a governance token, I would guess that is in a move to sufficiently decentralize to get themselves in the same regulatory position as Synthetix will be. I think that for DeFi is actually a really powerful thing if done properly. And done properly, what that really means is you have everything from governance to product development to treasury management, to potential risk mitigation or security issues, all of that handled by the community. And when we were talking earlier about why we believe we need to take a more hands-on approach to the community or with the community of these protocols, it's for this reason exactly. In the DeFi space, there's going to be the core protocol team that maybe the majority of the team still sticks around, and they're working on things that are funded out of the treasury. But instead of it being, hey, here's your paycheck every 2 weeks, it's, hey, I want to work on this feature. Let me submit a proposal and get it approved by the community DAO that's partitioning out those funds. And who's going to be the one that handles or mitigates the potential risk of a flash loan or an oracle attack? How do you decide what the governance model is, or if you need to change it? All these questions are questions that DeFi protocols need to work out. But you're starting to see the inroads of these things happening. And frankly, that's what gets us most excited about DeFi. If you can fully and sufficiently decentralize, these become open protocols like HTTP and SMTP.
Yeah, I'm interested to hear your guys' thoughts on the quote unquote mass adoption, because we did have Mashinsky on and he was talking about how DeFi kind of doesn't fulfill that narrative of maybe mass adoption with how hard the UI might be for a brand new user who's not even comfortable buying a single Bitcoin. How do you get into these DeFi platforms and, do the processes in there? But speaking of governance, before we get to that mass adoption point, speaking of governance, you guys are, running for council on Edgeware. How has that process been of trying to, get involved in this DAO community? Because we've had a ton of projects on. They've talked about DAOs. I think there is obviously, like you said, vital importance. So what has your experience there been on Edgeware?
Yep. So maybe just as an orthogonal point, we also have one of the seats. Vance has one of the seats on the Grants DAO for Synthetix,
Nice.
And that is distributing out funds actively. So we have some experience of working on DAOs and especially having it relate to distribution of treasury funds. Not to say that the council will necessarily be that, but I think that's one of the core roles of the Edgeware council seat. The experience has been as we would have expected. We're really close with Dylan. In fact, I was texting him this morning when I woke up and saw the news and said, "Hey, how you doing?" And
we all sent that text out this morning.
Yeah, exactly. And received a couple of them too. Yeah, I think he's really thinking about it from a holistic perspective of what does governance mean. And the council is going to be that first iteration of what governance is for Edgeware. It's not, and I mean iteration purposefully, it's going to be something, as we've seen with other governance models, that just morphs over time. Mm-hmm. And Edgeware just launched. There's some ideas about what makes sense to work on first, but frankly, we still don't know what is working and what it will be. And so until you have that, it's really hard to foster a robust community. Otherwise, it's just a bunch of validators that are community members. And you want validators, but you need users as well. Mm-hmm. And so figuring out that balance of who the right community is will, I think, dictate what the governance model is. So I think, going through the council process right now makes a lot of sense. Hopefully it provides some streamline of decision-making and processes, but it's going to be an iterative thing, and we'll be there every step of the way.
Interesting. Cool. That's a great point. So onto this mass adoption piece that I kind of touched on there. I want to hear your guys' thesis on what other sectors, because you guys obviously are super involved in DeFi, right? Like all of your investments say this is the future. But you guys do have that background in non-fungible tokens and creating that company. And it's like, I'm kind of wondering, like, is that where you see user adoption coming from? And then maybe that flows into DeFi afterwards? Are these completely separate? I'm super interested in non-fungible tokens and gaming spaces as well. So do you guys have interest in those sectors at all?
Yeah, absolutely. Like, our long-term view is still Web3 is real. It's coming. It's just going to be, a 5 to 10 to 15 year kind of generational shift in how you think about technology. And really, I think that DeFi is, the bedrock of that starting to happen. Like, I think one of the first things that you're probably going to see is the financialization of the internet. Betting on, how many likes your Facebook post is going to get. Betting on how many plays your Spotify song is going to have. Having some type of counterparty liquidity on non-fungible tokens. But really, like, the lifeblood of this first step, which is generally going to be kind of the financialization of the internet, is liquidity. And you really need something, and not to get all the way back to our investments, but like, if you can price a synthetic asset that is related to your Instagram feed or your Facebook page or your Spotify playlist, and you can start to have, not only a way to distribute it, but a way to kind of build the counterparty liquidity on the other side, then you can do things and create novel financial products that based around Web 2 and traditional consumer experiences that you just can't today. And that'll unlock, this whole panacea of new developer activity and new consumer products, which will come to fruition eventually. So that is really what we see as kind of the first step after DeFi. In terms of the steps after that, like, it's funny, you look through all the 2017 colloquially shitcoin projects, and you're like, wow, these these ideas are so stupid, and how could they ever, propose this? But like, my dark horse bet is that, not all of them, because certainly a lot of them were just outright scams, but some of them will actually work. Like a decentralized YouTube, that actually makes a lot of sense when YouTube is taking such a significant share from creators. If you're offering someone like PewDiePie, pseudo equity in the form of tokens, which have a right to cash flow to post on your platform, like, maybe that makes a lot more sense for the long tail of creators. And I think that things like that, people will slowly start to realize, just like, in the early 2000s, when you had things like Webvan and, Peapod, and people were like, oh my God, these were so stupid. How could we ever think that this would work? It's not stupid. You just kind of had a mobile phone sized hole in your business plan. And we're going to realize that there was a, something sized hole in all these decentralized networks plan. Maybe it's better tooling. Maybe it's a better user experience. Maybe it's, speeding the blockchain up, although I highly doubt that is the sole reason that these did not take off. It's right. Good consumer product teams actually taking a stab at these ideas. And I think, the good news is that building on a platform like a Facebook or an Instagram or, even a Spotify, like, isn't really a compelling pitch to developers. They're just going to say, why wouldn't I just build that on my own? There's a lot of platform risk, all these things. Like, there are tangible reasons why developers want to build on open blockchain networks. Uncensorability is one reason, but really the main reason for me is these tokens are fundamentally a new design space to incentivize user behavior. And once people start to crack the code, which I think they've already started to do in terms of, okay, I have these tokens, which are basically pseudo equity, how do I incentivize certain user behaviors? Once that happens, once DeFi builds liquidity, once people kind of, start to build the tooling that's needed for developers en masse to look at blockchain very seriously, those things will happen.
Yeah, absolutely. I like how you covered the ICOs. We were working at ICO Alert, I guess it was 2017, 2018. So we did talk to lots of projects, and it was interesting stuff to see how they carry out certain things. Some of them actually did not hedge the ETH, that they were collecting, which was shocking to me. And I was like, what are you doing? But at the time the market was mooning, and everybody that were raising funds, you raise like 6 million, that turns into like 16 million in a week. But once things started dropping off, that was definitely a bad thing for those projects. And some of them that had great ideas, but because they lost capital, because they didn't simply hedge, they couldn't build their project out. And yeah, just like the startups, it was like 80% of them essentially kind of fail to deliver on the products, right? And the market is still driven a lot by speculation, right? Speculation front runs basically the tech and what we have at the moment as far as like the demand goes and so on. So and that's super interesting. In regards to like other platforms, like for example, how about privacy coins? What do you guys think of privacy coins and companies that are trying to build on top of that? That's definitely a hot topic in crypto. But do you guys see an opportunity there to potentially add to your portfolio as well?
Yeah. So it's something that we've actually looked at a lot. Maybe not privacy coins directly, but privacy enabling products. And just to be clear, I think there's a huge difference between privacy and anonymity. Being able to have privacy, I think is frankly, as an internet consumer, is something that we should be granted. But that doesn't mean that we can do whatever we want and be totally anonymous. I think that there needs to be some control. So like finding that right balance, I think is something that we're still working on. And that's kind of how we see the world of privacy. It's something that should happen in blockchain. We should be able to have privacy of our Ethereum transactions, and figuring out where that privacy anonymity line in the sand is, I think is where we're looking. And a lot of that ties into DeFi too. I mean, that's exactly one of the reasons why we're looking at it. So yeah, to say we're looking at it for sure. We don't have the best model yet, but we're working on it.
Got it.
Cool. Well, say something that soothes me, okay? Because the markets are hurting me. I want to know about this narrative, right? Bitcoin obviously has changed narratives over the years. Obviously, we're kind of banking on this risk-off kind of digital store of value. Can be used in times of crisis that we're seeing, like right now. But obviously that narrative has not taken hold. So where does Bitcoin go from here? Where do maybe listeners at home, if you could say something that maybe soothes their broken bags, like that. What do you guys think about Bitcoin and crypto as it is right now?
Yeah, so I think we've talked a lot about things that act as pseudo network equity in open distributed networks. I think of Bitcoin as well as other coins that are technically crypto assets, that are store of value assets, as being that potential risk off asset. And the way that we view it, and that's not something that we dabble in, nor do we have a fund perspective on, but just being in the space, we have our own perspectives. Generally, we follow what Tom Lee talks about at Fundstrat. If you look at all the data that has been accumulated over the past 10 years, give or take, of Bitcoin actually trading in real volume, every single year that the S&P 500 is up a certain percentage, Bitcoin has an up year. And every year that the S&P 500 has a relatively down year, which has been very few, Bitcoin is down that year. And I think the difference is 6 up and 3 down. And it's perfect. All 9 of those line up perfectly. The perspective that Bitcoin today is a risk off asset is just factually incorrect. The data suggests otherwise. It is a risk-on asset, but what gives us hope, and we both own Bitcoin, and we both believe that it is probably a once in our lifetime opportunity, just from a technology and an investment perspective. What it has that's unique to any other asset that has come across maybe in decades or centuries is that it is currently a risk-on asset, but it has a call option functionality of being that risk-off asset eventually. And that is, I think, a really unique position for any type of capital asset in the world right now. It can be used for a number of different things in the meantime, and providing liquidity or providing a collateral asset to be used in other blockchain ecosystems, I think, is probably one of the more near-term opportunities. And that will drive volume, that will drive interest. But I don't think that it's fair to characterize it as a risk-off asset yet, but it could be eventually.
Awesome. Yeah, I agree. I was talking about something also in regards to, you mentioned liquidity, provides liquidity, where when we have these down days in traditional markets, for example, in Asia, and they tend to kind of control their selling pressure by restricting selling or restricting shorting of the stocks, which essentially slows down the liquidity for investors to be able to get out of positions and so on, right? And some of those investors that might be holding Bitcoin, they might be cashing out of that position to maybe add to their margin, to add to their positions, in the traditional stock market. That's why, we might see that risk-off affecting, Bitcoin as well. So that's, that's super interesting. And then for obviously, we know that due to coronavirus and the global slowdown, we know that the interest rates overall for most of the countries are going to be going down to zero, right, to stimulate the economy. But we know that that's not really going to be as effective as it used to be during the financial crisis. So it's going to, eventually impact the fiat currency for the people in those countries. And Bitcoin essentially should provide a hedge against that inflation, against that government holding that population as a hostage in their monetary society, right? And I was talking about the on-ramps and off-ramps that should be available in those countries, in distressed countries, that would drive the demand, right, for Bitcoin, from those people. But we're slowly getting there to get those on-ramps and off-ramps in those countries to deliver, Bitcoin price that will be actually, closer to the market price, not marked up like ridiculously, because of OTC deals and so on. So my question is, how do you guys see, this? Do you think this coronavirus and this global slowdown is that going to be that trigger kind of for crypto to come up and bring the next level of demand as the monetary structures around the world continue to crumble and we go down to zero in terms of interest rates and so on?
Yeah, so I think if you zoom way out and you say, all right, let's draw a chart with the inflation of all fiat currency as one line and the inflation is Bitcoin as the other line, and then you take a 100-year perspective, you're going to get to the point where you're like, okay, like Bitcoin obviously is better in a world where this fiat currency is just becoming devalued. The question is, like, at what point does consumer sentiment flip? Like, how bad does it need to get? And in a lot of senses, maybe this is, but it feels like the beginning, right? Because, stocks sell off, people freak out, they sell their Bitcoin. Okay, cool. Then we print a bunch of money, the economy gets back, on its feet. Okay, great. But then, you have this issue of, how many times we're printing our way out of problems, and really kind of like you need that trend to extend long enough and that kind of psychology around consumers to be kind of solid enough in terms of, okay, our money is gradually becoming less worthy. Let's find it an alternative. It's just going to take a while. And I think that's okay for things like Bitcoin. In terms of, like things that can, soothe the bag holders, bags, I guess, when things get into, flat or bear or whatever style markets, the things that really kind of keep us excited is seeing continual progress on the projects we invest in. Seeing Synthetix put out new assets, seeing that Synthetix improve the protocol, seeing Chainlink, put up new price feeds, seeing, Chainlink put on new types of off-chain computation for their oracles. Like, that's something that's just really fundamental to the projects and is not kind of related to the price, which kind of keeps you grounded and interested and rational about kind of where things are headed. I think that we both own Bitcoin and we're fans in general respects. I think the one thing that we wish we could see a little bit more is development progress out of Bitcoin. Not necessarily changing the monetary policy or anything like that, but fundamental progress being made to the code base would be encouraging. But it remains to be seen if that's a feature or a bug. And in a large amount, that determination is made when the hardness of the money is finally valued over kind of this ever devaluing fiat currency.
Absolutely. Yeah. Q, I'm going to let you ask a question in a second. I just wanted to comment about what you said in terms of the bear market and how, Synthetix and all these projects are continuing to build, release products and so on, which is that silver lining in a bear market where it pushes developers, it pushes the leaders to continue to build aggressively, and go against basically the bear market. And usually when we have a big bull market, everybody kind of sits back and chills, takes their time, things are happy, right? So the development kind of, we've seen that slows down because, there's that euphoria in the market, but the bear market is really what pushes a lot of these projects on the brink of okay, we have to keep pushing and pushing and pushing and so on. So absolutely, that is silver lining for the bear market. But go ahead, Q.
Yeah, no, I was going to comment as well. I mean, the one thing I would comment about Bitcoin right now, and I tweeted about it this morning, but the halvening is kind of like a far gone thing at this point, right? It was like a huge deal maybe a month and a half ago, and now nobody could care less except for these small to medium sized mining firms that are essentially getting double halved, right? Like, they basically are going to get screwed. And I wonder what that does to the decentralization of hash rate. If you guys have any thoughts about that, any strong thoughts, you can go ahead. But we're about an hour in. I was just going to kind of zoom out and move on. But do you guys have any strong thoughts there?
Yeah, I mean, not necessarily the strongest of thoughts, but generally, I think to your point on this narrative switching in essentially 6 weeks, if not less. I think it's been more like 3 or 4 weeks. The same thing could happen on the other side. We could be sitting here in mid 2021. Bitcoin's closing in on $100,000, and it is the reserve currency of the world. It could happen that fast, and that's just the speed at which these industries and these narratives move. So don't ever count Bitcoin out, is the lesson that I've learned over the last 5 years.
Yeah.
And yeah, 100% agree on sort of the fortitude of sticking it through a bear market. Some of the best companies in the world today were forged and started in bear markets. We've seen Chainlink go through, and we've seen Synthetix go through a pivot and a hack, which they've come out bigger, better, stronger for it. So I think these are the trying times that define the best projects and the best companies.
Yeah, man, I need that hopium. So I appreciate those words. Those are good words. So we're coming up on an hour, guys. If there's anything that we kind of missed as far as what you guys are doing at Framework Ventures, otherwise, I do kind of want to hear about the scene. I know, Vance, you said you were in Asia, but I do want to hear about the scene in LA as well. So if you guys could touch on crypto scenes there as well as kind of the culture around it.
Yeah, Tokyo crypto scene is pretty interesting. So, one of you mentioned that you were previously worked on an FX desk. FX trading was crypto before crypto was crypto.
Yep.
Hugely volatile, lots of leverage, extremely popular in Japan. And Japan has gone through all these weird idiosyncratic bubbles. And FX was really the precursor to crypto really taking off in the country. So Japanese people in general are used to punting around things that maybe they don't fully understand with a lot of leverage, just trying to make kind of an extra buck. And so crypto is actually very naturally received in that country, and is dominated by a handful of kind of government licensed / owned operated exchanges. And And the regulatory situation for listing assets is very top down as well. So if you want to get approval to list a new asset on the top exchange, which is Bitflyer, you actually need to go through the Japanese government kind of cryptocurrency task force. So there is really this kind of command and control style to operating the cryptocurrency market in Japan. That being said, you look at Japan, they own probably 70 or 60% of their stock market, just from the central bank itself. There's obviously kind of a cliff that country is headed towards in terms of, their currency becoming, less of a store of value than it used to be. And that's actually a lot of, on top of just kind of the risk on nature of FX trading, a lot of what drew people's interest to that. And so in terms of, Bitcoin being seen as a store of value medium of exchange, that is more palatable to the average Japanese consumer than I would say to a American consumer with a better financial system. And you can see that even walking down the streets of Tokyo. There's a million shops in Japan that take BTC as currency. And you can go right up to Big Camera Store and buy, a PlayStation 4 or whatever, and you can pay with Bitcoin. So it's really, people are more culturally attuned to kind of what's going on. In terms of the development around, new protocols and new ideas and new things, that's where Japan has kind of historically lagged the United States and Europe. But, we'll see. Do you want to do the LA scene?
Yeah. So Vance was in Tokyo. I was in LA. We were co-investing, doing sort of side angel investing in projects that we thought were interesting. We did a follow the sun model where when it became nighttime in LA, it was daytime in Tokyo, and we'd hand off the private keys and go from there. And since then we built Hashleets, the digital collectible company in Los Angeles. It was, I think, fantastic to be in LA for that type of a business, just given the relationship of content and entertainment and storytelling with something like a new technology medium like blockchain technology. But since then, we've actually moved to San Francisco. A lot of the projects that we were working with, had a strong presence, if not a sole presence, in San Francisco. And now, from our day-to-day office, not our coronavirus hideout, our office is about 10 blocks radius from most of the projects that we work with. So we think that's a pretty unique opportunity, just to be able to be walking distance to most of the people instead of having to pick up a phone or text them or call them.
Absolutely. And, it's funny how you mentioned Japan really likes FX and the leverage there. I remember back in the days you could get something like 500 to 1 leverage, in FX. I mean, some brokers offered like 1,000 to 1, which was like, wow, that's insane. But that leverage is used in FX, and FX usually, like, you'll have a move like 0.5% a day, which is like considered to be a move. But then we have crypto that comes out, and that moves like 20% a day, and then we have 125x leverage. I was like, guys, really? Like, it's insane. So I saw a lot of things that kind of ported over from FX into crypto, like, copy trading, for example, was one of the things, which is really cool. So that kind of brought me into crypto, and really started seeing certain things kind of play out, and certain mistakes that people were making in crypto that they made, that I saw people making in FX. It was pretty fascinating. So definitely a huge connection there. I completely agree with that. So yeah, we looks like that's about it as far as the questions go for me. We do have the last question for you guys. We asked all of our guests, and it's basically a book question. If you guys have one book recommendation, it could be related to crypto, could be not related to crypto, whatever you guys think would be your favorite book that you read.
Over the past year, my favorite book, or at least the book that I literally couldn't put down, mostly because of the space that we're talking about, was Billion Dollar Whale, which is the Joe Low, one MDB, Goldman Sachs, embezzling $2.7 billion story. It's bound to be a movie. Paris Hilton, Leonardo DiCaprio, Martin Scorsese all feature in it. It's a fantastic, fascinating story. So definitely suggest that.
Yeah, for me, it's my favorite book of all time is called 10 Maps That Changed the World. and it basically describes the history and kind of geopolitical consequences of each country just through its geography solely. And, you know, like an example of that is, you know, Russia has no port that is not frozen for at least half the year. And if you look at all the things they've done with Crimea or Georgia, like a lot of what they're trying to do is establish a foothold in a warm water port. And like, it helps to just kind of say, like, outside of technology and all the stuff you hear on the media, a lot of the world is defined by rocks and dirt and water and mud. And it's interesting to bring it full circle.
Yeah,
that's awesome.
Yeah, it would have been interesting to live in a time where the colonies first started getting set up in the U.S. because the amount of just natural resources that we still even have today. But I'm sure that played a huge part in that book as well.
Yeah, absolutely. America has a really incredible section in it if you're interested in that.
Yeah, we have a lot of viewers all over the world, so we don't mean to be raising the American flag too much. I know I got one in the back here, so this isn't like an Alex Jones podcast or anything. But guys, this has been a great episode, man. Please let everybody out there know where they can, you know, follow you guys on Twitter or follow Framework Ventures.
Yeah, our website's framework.ventures. Our Twitter is @highframework. Hit us up. Let us know. Love to chat.
Yeah. Great to chat, guys.
Awesome, guys. Thanks for coming on today. And hopefully you guys do okay next week and in the coming months.
Okay.
Appreciate it. Yeah. Thank you so much.
Thanks.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.